welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand all the latest cues from the D-Street. We'll also get you expert views as to how should investors be approaching their investments in equities now. Where are the opportunities of buying emerging for you, where you can actually make handsome returns over a period of time? We'll discuss all of that. But first up, a quick check on how the benchmark indices are moving as we move into the second half of trading action today. Well, if you look at the Nifty and the Sensex, sharp returns on the upside, with the Nifty moving 75 points higher in trade at 17,673. Talk about the Sensex, it's over the 60,000 mark right now. 200 point of a jump, 0.3% of an uptick is what you can really spot. Both the indices up by 0.3, 0.4% each. When we talk about the other broader markets as well, there's a broad-based buying action that you can see the supporting, the benchmark indices. The mid-caps are up towards the high point of the day, about 0.3% uptick right here for the Nifty Mid-Cap 100 index. The small cap 100 index is also moving slightly higher by about 0.1, 0.2% odd. In terms of the Nifty sectors as well, barring slight losses that you are able to see on the Nifty Bank and the banking constituents, rest of the sectors are actually moving higher, with the Nifty Realty pack really taking all the limelight today. Looking at the kind of move that you're seeing, days high, 3.6% of a sharp up move for the Nifty Realty, of course led by a whole host of updates that are coming in for the March quarter for a whole host of companies like Godrej Properties. It's up by 7.7%. You have Sobha, you also have Ajmera Realty. We'll focus on all these stocks and we'll get the expert view on that as well. The auto stocks are also moving higher again with the business updates for Q4. Tata Motors, of course, the top Nifty gainer, leading the pack, about 6% higher, and that's pushing the index of the Nifty Auto at over 1% higher. Apart from the Tata Motors counters, you're also seeing some moves on the upside as far as the gainers are concerned. Say from the oil and gas pack, you have ONGC up by 3.3%. Adani Group stocks, some of them are moving higher, with Adani Enterprises up by 2% as well. Hindalco, Adani Ports, UPL, the other gainers at this point in time. On the lagging side, as far as the Nifty losers are concerned, you will be able to see slight losses coming in on the banking and the finance names like Bajaj Finance, that's down slightly. Asian Paints, Tata Consumer Products, that's down by about 1% as well in trade today. IndusInd Bank, SBI Life, Axis Bank. So you have these banking financial names, slight losses in the FMCG pack as well. That's not really participating in the overall upbeat mood that you're seeing in the markets. But time now to welcome our guest on the show. Nilesh Jain joins in from Centrum Broking, the expert on technicals and derivatives. Welcome, Nilesh, and thank you so much for taking the time out for this discussion. First up, your overall sense of how are you looking at the markets? We've gone through this entire bout of volatility starting from 2023 until now. From last week, we did see that some favorable, signs have been able to be witnessed. When we talk about the macro moves on the RBI, they have not raised the rates, supporting the market sentiments. Flows from FIIs have stabilized again. The markets are moving higher. What is the sense that you're getting right now? Is the worst behind us?
Hi, very good afternoon to you, Sakshi. Yes, if you look at the overall structure, that is certainly indicating that the pullback that we are witnessing in last 6 consecutive sessions is likely to extend further. And in the previous week, we saw a pause in the rate hike, and that has certainly changed the sentiment of the overall market. And looking at the levels now, if you look at the important support level is now placed at 70,500. That is exactly 200-day moving average, simple moving average, exponential moving average, and apart from that, 50-day moving average is also placed near about those levels. So cluster of support near about 70,500, and the next major hurdle is now placed at 70,800. Any decisive breakout above that will open the upside towards 80,200. Even if you look at the derivative data, we have seen slight development on that front as well. The put writers have shifted their position towards 70,500. The call writers have gone towards 18,000 checks. So the new range has come up now, 17,500 to 18,000. With a buy and decline approach. Overall, I believe looking at the volatility index, which is trading near about 12 levels, the overall market is very much in the comfort zone for the bulls. Any further decline on the volatility index will certainly pull the index on the higher side. So overall, yes, it seems like worst is behind, but we need some more confirmation on that front. Couple of events are lined up this particular week, and also the earning season will begin. So before that, I think it's too early to comment on that. We need to, wait and watch out for this event to get over.
Right, you're right. The focus will be on the earnings season as well. I will come to the specifics as to where you prefer the earnings bets from as far as the Q4 earnings are concerned. But we are already getting some of the updates and the stocks are reacting to that. Let's talk about the Realty pack. That's the one that's buzzing the most in trade today. Stocks like Godrej Properties, for example, it's up by 7.5, 8 odd percent. And of course, with the kind of updates that we've got as far as sales are concerned, the shares are up by 8%. And they're trading on the best ever fiscal results that we've seen. That's also pushed the Nifty Realty Index up at the day's high, 3.7% up. Now, we do know for Godrej Properties at least that the sales bookings have risen 56% to hit an all-time high again. Now, similarly, Sobha Limited, for example, and stocks like even Ajmera Realty, they're also buzzing in trade on the back of record sales that have been, at least coming about. And, they're also aiming to double the numbers in FY24. I wanted to understand from you, what's the sentiment looking like as far as the Realty pack is concerned? Is this the best time to really tap on this momentum and get some of the Realty stocks in our portfolios?
Absolutely, Sakshi. If you look at the Nifty Realty Index, a triple bottom sort of formation can be seen near about 365 levels, and we are witnessing a strong reversal on the daily time frame chart. Now, looking at the stock-specific actions like Godrej Properties, Sobha Realty, DLF, these are the three specific counters where we continue to remain bullish. And specifically, Godrej Properties in last two consecutive sessions, we have seen a strong up move. At current level, the risk and reward is not favorable, but I believe any decline could be a good opportunity to get into Godrej Properties for the upside target of 1300 to 1350. Stop loss should be placed below 1100. And apart from that, if you look at DLF sort of counters, where we have seen a strong up move in the previous week as well, and this week as well, it has started on a very strong note. The outlook looks very strong for the DLF as well for the upside target of 420 to 430 sort of levels. Stop loss should be placed below 380. So overall, see Nifty Realty Index, where we have seen a lot of consolidation and a gradual decline as well. Now it has come at a very corrected level at an attractive valuation can be seen as well. So overall, I believe any decline could be a good opportunity. Get into realty infra sort of counters. We have a positive outlook for next 6 to 8 months sort of time frame.
Okay, positive outlook over the next 6 to 8 months, and select counters that Nilesh has already selected right here for potential upside that investors can definitely look at. The sentiment definitely looks positive on the kind of record sales being reported by most of these companies right here. Apart from the Realty pack, the auto stocks are also showing some kind of a momentum in the faster lane, especially led by Tata Motors today, with the kind of sense that we are getting on the global sales, and the wholesale sales that are looking to be improving at this point in time. The stock is up by 6 odd percent, although it's come slightly off the day's high point of the day. This has been a very volatile counter. What is your own sense of Tata Motors and the entire auto pack?
First, we look at the entire auto pack Nifty Auto Index. It has found support near about 11,800, and interestingly, it has surpassed its 200-day exponential moving average that was acting as a major barrier that has already been taken off. The outlook looks positive for 13,000 to 13,200 sort of levels for the Nifty Auto Index, and the support is near about 12,200. If you look at Tata Motors from this space, in last 2 years, the stock has consolidated in the range of 380 to 500 sort of levels. So at current level, there is still room for another upside of 100 and 150 point. I think at current level, those who are already holding the long position can continue to remain long. For any sort of fresh entry, I think one should wait for decline towards 440 and 430 sort of levels. That could be a good entry level. The stop loss and I would say a base formation can be seen near about 400 levels. So in this space, we are very much positive on Tata Motors. We are very much positive on Bajaj Auto as well, where very strong chart pattern can be seen, and this has been one of the outperformer in the Nifty Auto pack. So Bajaj Auto looks positive for 4100 to 4200 sort of levels on the high side. Top loss should be placed near about 3900. So couple of auto stocks, Bajaj Auto, Mahindra and Tata Motors. These are the three counters where we have a positive outlook.
Okay, understood that. So select counters where you've also been given the positive outlook on the auto space as well, in case this is the space that all our viewers are tracking as of now. So do keep an eye out on these numbers as they flow in soon enough in Q4 as well. Apart from this, from the earnings pack, what are you personally really looking at, Nilesh, and any specific sector that you're most bullish on?
Yes, so we have been bullish on banking space and looking at the stock specific action in this particular space. HDFC Bank looks very attractive. And although given the fact that it has already given a sharp run up in last 6 to 8 sessions, at current level it is not advisable to go long, but I think it's a good stock to be into and
Okay.
stay put for the upside target of 1700 on immediate basis, and 1750 could be seen in the near term. So any decline could be a good opportunity to get into this particular counter. Keep a stop loss below 1600, decline towards 1650 could be a good opportunity. So that's the one space that we have been bullish. Apart from that, power related stocks where we have a positive outlook, oil and gas space, given the fact that we have already seen a sharp decline of late in the crude oil, so that may give some sort of benefit to the counters like OMC stocks like BPCL, HPCL, and IOC. So these are the couple of counters where we can expect some reiterate in a positive outlook going forward.
Right, absolutely. Now, another important update that's coming about is on the monsoons front as well, and that is something that everybody should keep an eye out on apart from the earnings factor. So let's take a look at the kind of predictions that SkyMet has really come about with. Monsoon 2023 is likely to be below normal amid the El Nino threat, and that's what forecast has come in from SkyMet. The forthcoming June to September monsoon is predicted by private weather forecaster SkyMet to be 94% below normal with a plus minus 5% error range of the long period average. Now, there's a likelihood of El Nino which is increasing, and its probability to become a dominant category during the monsoon is actually going large as well. In fact, the India Met Service has also predicted above average temperatures for this summer, but has not really yet produced a monsoon forecast as of now. But what does this early report from SkyMet really tell us, Nilesh, and how likely a threat could this be on some of the stocks that are in investors' portfolio from the fertilizer, from the agri space, and the monsoon related space as well?
Sakshi, if you look at from market point of view, the biggest threat as of now I can see is El Nino, and that is certainly not a good sign. And looking at the overall, stock specific action because that could get affected because of that could be fertilizer stocks. So we have already seen a gradual decline in the counters like Chambal fertilizers, fact, where a constant decline can be seen. So we need a good monsoon, which seems unlikely this time, and market may react on that front. That may have some negative impact on the counters like FMCG, fertilizer stocks. So watch out for that. And I think for the market awaits the El Nino impact. So better to stay away from these sort of counters for the time being. Wait to just to get settled down, and post then we can relook for the market.
Absolutely. Well, thank you so much, Nilesh, for being with us on the show and discussing with us all these insights about markets and the way investors should now be approaching their investments. On the one side, we do have the upcoming earnings, and some of the companies are already reporting strong business updates, and that's where investors should keep their focus on. But of course, a bigger threat that's looming large is El Nino, and we need to keep an eye out on that as well as we move forward from here. But do stay tuned on to Business Today TV to catch all the updates from the world of stock markets. Markets are still moving higher. Sensex is up by 0.4%, 60,068, 17,682 currently for the Nifty as well, up by 83 points. So strong momentum on the upside. We just need to keep an eye out on to see whether the second half emerges to be stronger than the first half as well. We'll keep you updated with all of that, and for that you need to subscribe to our channel and continue to engage with us on our other social media platforms. That's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.